Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within your favorite company's paperwork. And let me tell you, today's filing is a doozy involving digital assets and some rather important venue changes that might make or break how a certain fund performs. Today we are diving into a current report, an 8K filing from the Grayscale CoinDesk Crypto 5 ETF. This isn't your typical quarterly report filled with endless financial tables, but it is crucial because it tells us about significant operational changes that directly impact how the fund values its holdings. Think of it as a company announcement that is important enough to be reported to the SEC immediately. This report is dated the 18th of November 2025, and it is all about how the underlying cryptocurrencies that make up this ETF are priced. So what is the big deal? Well, this ETF, the Grayscale CoinDesk Crypto 5 ETF, or GDLC as it is traded on the NYSE Arca, holds 5 different cryptocurrencies to figure out how much each of these crypto assets is worth. The ETF relies on something called an index price. This index price is calculated by a company called CoinDesk Indices Incorporated, which acts as the index provider. They use data from various digital asset trading platforms, which they call constituent trading platforms, to determine that price. The index price is essentially the US dollar value of each crypto asset in the fund, and it is calculated every business day at 4 p.m. New York time. It's based on the prices shown on these specific trading platforms that are part of a reference rate called the CoinDesk 6 reference rate. This is important because if the platforms used to calculate the price change, the fund's valuation can change too. And that is exactly what happened on the 18th of November 2025. CoinDesk Indices decided to remove IPIT as one of the trading platforms used to figure out the prices for Bitcoin, Ether, and Solana. Why? Because IPIT for the Bitcoin US dollar, Ether US dollar, and Solana US dollar trading pairs stopped meeting the conditions set by the index provider. When a platform doesn't meet the criteria, it is out. This is a pretty big deal for any fund that relies on these prices for its operations. Before this change, the list of trading platforms used for Bitcoin US dollar and Bitcoin Coin US dollar trading pairs was quite extensive, including places like Bitfinex, Bitstamp, Bullish, Crypto.com, Gemini, Kraken, LMAX Digital, and OKEx. Among others, the same applied to Ether XRP. Sol and ADA, with varying but still robust lists of trading platforms for their US dollar and Coin US dollar trading pairs. After the removal of IPIT, the list for Bitcoin, Ether, and Solana trading pairs became slightly shorter. For Bitcoin US dollar trading pairs, IPIT is no longer listed. Similarly, for Ether US dollar and Solana US dollar trading pairs, IPIT has been removed. The other cryptocurrencies like XRP and ADA, and the Coin US dollar pairs for Bitcoin, Ether, and Solana, still had their original sets of trading platforms. Now, the report also makes a critical point: the index provider can and will change these trading venues or the calculation methods whenever they see fit. They have scheduled monthly reviews where they can add or remove platforms that meet or fail their criteria. This means the pricing of the assets in the Grayscale CoinDesk Crypto 5 ETF can be a moving target, influenced by the index provider's ongoing vetting process. This isn't a static benchmark, it is dynamic and subject to change, and investors in GDLC should be aware of this constant evolution. This report is officially signed off by Grayscale Investment Sponsors LLC, which acts as the manager for the Grayscale CoinDesk Crypto 5 ETF. Edward McGee, the Chief Financial Officer, signed it on the 21st of November 2025. This signature confirms that Grayscale, as the manager, is acknowledging this important change in the pricing methodology for the fund's components. So, what does this all mean for investors in the Grayscale CoinDesk Crypto 5 ETF? Essentially, the fund's value is tied to prices determined by a specific set of exchanges. When one of those exchanges is removed, like IPIT in this case, it can affect the accuracy or the perceived reliability of the index. While the report states the removal was due to failing to meet conditions, any change in the calculation inputs can lead to slight or potentially significant differences in the fund's net asset value. The good news perhaps is that the index provider conducts regular reviews, so they are actively managing the quality of the data inputs. However, it also means there is always a risk of further changes. The key takeaway here is that the pricing mechanism for the assets within this ETF is not set in stone. It is managed by a third-party, CoinDesk Indices, and subject to their criteria and ongoing evaluation. This adds another layer of complexity and potential volatility to an already volatile asset class. Now, looking at this filing more broadly, what we see is a focus on operational transparency for the Grayscale CoinDesk Crypto 5 ETF. While there aren't papillon statements here, This filing is about the integrity of the data that underpins the fund's performance. The removal of a trading platform, especially one involved in major trading pairs like Bitcoin and Ether, signals a proactive approach by the index provider to maintain data quality. The risk for investors is that these changes, while intended to improve accuracy, can introduce short-term price discrepancies or require recalculations that might not perfectly align with real-time market movements. The opportunity lies in the fact that a more robust and diversified set of trading platforms generally leads to a more reliable price benchmark, which is crucial for any ETF. The underlying strategy is clear. Use reliable data sources to accurately reflect the value of the crypto assets held. The main risk is the potential for disruption or inaccuracy during these platform changes, or if platforms are removed hastily. Overall, this filing acts as a heads up to investors about the dynamic nature of crypto pricing and the importance of the data sources used by their ETF. Alright, that is our breakdown of this 8K filing. What are your thoughts on these platform changes and how they might affect crypto ETFs? Let me know in the comments below if this detailed look into corporate filings was helpful for you. Please hit that like button and subscribe for more decoding, and don't forget to join our Discord community, the link is in the description. Thanks for watching, and see you next time.